the state of the housing market. So interest rates have now gone up on the 30-year mortgage. They're north of 5%. And that's putting a huge pinch on things. Obviously, the supply side has been very low when it comes to housing. The demand side has been super high. And so price pressure has been immense. The rising interest rates and the rising prices, I think, are getting to a point where maybe there's going to be a pause, maybe there's going to be a correction. I was reading Ben Stein. He's a guy I like to pay attention to, and his father, Herbert Stein, was a famous economist back in the day. And he used to say that if something can't go on forever, it'll stop. Right?
Yeah.
Well, I think that housing prices is a good example of something that can't go on forever. So the increase will eventually stop. That's one of the reasons I actually see a potential recession on the horizon, is because housing is such a huge component of the GDP. And if people are not purchasing houses, that's going to put a damper on economic growth for sure. But things are to the point now where the price is out of reach for most people.
Yeah.
Between the cost of the real estate and then the interest rate to finance the purchase. So the point that Ben Stein was making was that there's probably going to be a correction on prices, but if the fundamentals that are causing the price inflation don't change, then the inflationary cycle is going to kick back in and prices are going to go back up. So the point of this is that there may be a buying opportunity at some point in the relative future that you want to pay attention to. Real estate is a great asset to have in inflationary times. It's a great asset to have almost any time, but in high inflationary periods, real estate is a great performing asset. But you don't really necessarily want to buy in when prices are at their max, right? That's a conversation you and I have had a lot, is you still have to factor in what kind of a return are you going to get for the investment that you're making. And if the fundamentals don't make sense, you don't want to jump in on that. But I've set the stage. I've provided all that information. So I'm going to kick it over to you because you are actually the realtor. So I'd like to get your feedback on that.
Yeah.
Do you think Ben Stein's onto something or not?
You are onto something. And I don't know that any of us know which direction it's headed yet. But if you get back to the basics, I'm the guy that believes, and not everybody believes this, but when you talk about investing, real estate investing, your money's made on the buy. I've never met anybody, even if they disagree, that's been able to conclusively show me that that's not true. So you got to buy right. And I don't mean just price. There's a lot of factors. There's price, there's financing cost and mortgage cost and fees and insurance and HOA. So there's a lot of stuff. Location, geographical. What's that area going to be at? Is the community growing? Is it not growing? So there's a lot of factors you got to look into. So when you do your due diligence correctly on the buying side, you've kind of built in your profit already because you've done what you need to do. It's already there. So, but having said that, we are seeing some interesting times, and we were talking about this earlier. We still have a low inventory. However, that inventory is sitting on the market longer. Anything above the affordable housing, the lowest hanging fruit, is sitting on the market a lot longer, and they're starting to drop their prices. So not only is it just sitting on the market, but they're reducing their price. And there's no longer bidding wars historically on those products. Builders in a lot of areas have a lot of inventory in terms of land and houses in development. So they've actually started slowing down their building process, right? That could go either way. I mean, if they end up with too much inventory, they might have to sell that at a loss because they'd rather sell it at a loss than hold on to it and carry it as a loss.
Right.
The price of the products are going down. Lumber's actually been going down lately, past few weeks. I've talked to some skilled trades. They're not as backed up as they used to be. You have the inflation issue. You have the interest rate raising the cost of carrying the product. And even the student loan deferring student loan, which is artificially keeping more money in our economy, which actually kind of keeps inflation high. I mean, there's so many factors in there. I mean, it's like anybody's guess, right? How do we?
Well, you can never guarantee what's going to happen, but you look at the big issues and you try to prepare yourself for some potentially outcomes that may be potentially likely.
Mm-hmm.
Now, they are not guaranteed, so they may not come to pass. But let's say that everything that we've talked about does come to fruition and that you kind of get some inventory that comes on the market because all the builders were building to try to take advantage of the price bubble, and interest rates go even higher and demand slows down even more. Well, you may get a blip where there's kind of a temporary adjustment to the supply and demand dynamics that we see right now. Right now, demand low, supply, the other way around. Supply has been low, demand has been high. Well, if demand slows down and then you get kind of a bubble where supply comes out on the market, you're right. These home builders, they can't hold on to that inventory. Even if they have to sell at no profit or very low profit or even a small loss, they're going to liquidate that inventory. They have to. A lot of them are leveraged, and that's the only way to pay off the loan is to sell the property. So they'll do that. As a potential investor, you want to look out for those conditions. Now, another rule about real estate is that it's always local. So, we're in Florida. A lot of people are moving to Florida from other places. So the real estate market here is going to be hotter than it would be in, maybe a place where people are leaving instead of moving to. So you have to evaluate the conditions of your local real estate market. It's good to talk to a professional to get their feel for what's going on where you are. But ultimately, what you're doing is you're just looking for opportunities. If you're an investor and you're looking at getting into real estate, you can either buy now while prices are really high and supply is really low, or maybe you can wait for another 6 or 12 months and see if some of this plays out. And if it does, then the prices might slow down or even come back down a little bit before they go back up again. Eventually they will, unless, the fundamentals change and they get inflation under control. But if they don't get inflation under control in the next 12 or 24 or 36 months, this might be the best time, the next 6 to 12 months might be the best time to find buying opportunities that you're going to have in the foreseeable future. So that's the only thing. Yeah. It's not a guarantee that you're going to find a great opportunity, but it's just kind of opening your eyes and seeing what's out there and being ready if that does play itself out.
Well, yeah, that's correct. And if you're buying it correctly and you're not over leveraging yourself, you're going to end up okay either way as an investor. If I had to pick a way that I was going to lean towards, I actually lean towards some buying opportunities happening, but inflation coming under control. But I could see around August, September, October, I could see some opportunities come up because prices have actually started to come down. I think you're going to see demand ease up a little bit. I think you're going to see a little bit more supply. So to our investors out there, there's a couple numbers I want them to pay attention to. Pay attention to how many homes are on the market or commercial properties, if that's what you're into, either residential or commercial. Pay attention to what is the average amount of properties on the market for a given month in that area. and what did it used to be, 5 years ago. So that'll let you track as we move forward, which way are we headed? Are we seeing more inventory or less inventory? Because a real estate market is a clear indicator of where the economy is going. It really is. It's one of the biggest, if not the biggest part of it. So pay attention to the inventory numbers, how long it's staying on the market, and pay attention to the interest rate. And as we move forward, you're just going to see them opportunities present themselves. And I don't know. That's what I was going to bring up. I read another article the other day where they said the chip shortage seems to be easing up a little bit on the pressure, and we shouldn't have such a shortage in the chips. I have seen some more stories coming out about various industries where it seems like the shortage isn't as bad as it was. So that's going to play a factor too. And actually I think as the shortages ease up, you'll actually see prices come down.
Yeah. Well, we'll see how that goes. I mean, obviously, if prices come down, that's going to bring some relief on the inflation side. But it may also be a consequence of economic slowdown.
Yeah.
And one necessarily goes with the other most of the time. To get inflation under control, usually you got to take your medicine, and that means going through a recessionary period.
The Purposeful Podcast.